Hey, everybody, welcome back to another episode of the 6-5 podcast. I'm hosting today with my esteemed co-host, Mr. Patrick Moorhead. I'm Daniel Newman, Principal Analyst, Founding Partner, Futurum Research. Patrick, it is Friday. We missed last week. We didn't really miss last week. We were at MWC, traveling back. We were doing our 6-5 in the booth, had some great pods and shows and conversations there, but we didn't do our regular show. So we're doing something different this week, and I'll introduce that in a moment. But before I do, you're looking good today, sir. How are you, Mr. Moorhead?
Doing well. You know, I've been on the road for the last 5 weeks, and I'll admit this whole getting back to normal thing is not normal, is abnormal. But two of them were kind of pseudo personal trips, and the other three will be business. But it's good to be here, and it was great to see you in Spain. You know, the ham, the cheese, maybe a glass of wine here and there was incredible.
The food poisoning that put me on my rear for the better part of a day, but only missing one meeting. But yeah, it was good to be on the road. And yes, this is the part where if I had one of those cool live sound effect boards, I would do the wah wah for poor Patrick in, where was it, Cabo and in Scottsdale. You poor soul. Oh my! Everybody's heart go out to Mr. Moorhead right now. He is struggling with those ocean and mountain views that he's had to suffer through. But no, it's serious. We all know, if you're entrepreneurs like we are, vacation is sort of it's a distant concept that occasionally rears its head for moments within weeks that we think we're taking off. So listen, I totally understand. In fact, oftentimes any days you do take off almost feel punitive because you only come back with more work to do. But that's the life we choose. We're in one of the funnest businesses in the world, getting to work with some of the coolest, most prolific and interesting companies. So I can't complain too much, just a little tiny bit here. But Pat, different week, different format. We missed y'all last week, and we were going through the notes saying, what 6 topics are we going to talk about this week? And you and I got exchanging on the chat, and we're like, forget it. We're going to do a double down SpeedLoader edition. We're going to do 12 topics. And this format's going to be a little bit different. So if you're a regular listener to the podcast, normally it's 6 topics, about 5 minutes each, usually a little bit longer. And we hit the biggest news with our analysis, our inputs, and our insights. But because we missed the week of MWC, there was a ton of announcements, a ton of earnings. We're going to do the double down. We're going to do 12 topics. But as opposed to our normal back and forth topic to topic, we're going to do Pat 3, Dan 3. And when Pat gives his 3, I'm going to give a quick comment on each, and vice versa. I'm going to do the 3 topics I choose, and Pat's going to give a quick comment. So just get used to that for today, but don't get used to that in permanence. We probably will only do this very occasionally when the amount of news warrants it and or we have to miss on a Friday. Now, quick reminder for everybody, the show is for information and entertainment purposes only. And while we will be talking about publicly traded company, their earnings and results, do not take anything we say here on this show as investment advice. Pat, I'm out of breath. It's only been 3.5 minutes. I feel like I've been hosting this show for half a day. That is what happens when you spend too much time eating ham and queso and not enough time exercising. But rock and roll. What a week we have. All right, we've got MWC, Apple, Google, Salesforce, Honeywell, Oracle. We've got a big executive move, Marvell Earnings, HPE Earnings, a big Qualcomm announcement with BMW, Mitel's Analyst Day, and Splunk announced a new CEO. So, wow, what a bunch of stuff to talk about. Yeah. Mr. Moorhead, I'm going to silence for the next 6 to 10 minutes here, and I'm going to let you kick off first topic, MWC wrap up.
Yeah, so gosh, it's hard to put an entire week into 5 or 6 minutes, but I'm going to do just that. So, Mobile World Congress, historically, it's interesting. It started out as a carrier show. For the telcos, the equipment company makers, and then it evolved into a carrier and smartphone show. And what happened this year is well, first of all, Apple never showed up to MWC, but Samsung decided to bail on MWC as a launch vehicle, and instead had their announcement 3 weeks beforehand. So it really was back to where it started, which was a carrier and carrier equipment show, and that's not necessarily a bad thing because there's so much going on in this space right now. And if I could encapsulate this, I would say RAN transformation is absolutely accelerating, whether that's vRAN or ORAN. Obviously, RAN is not going away. I just invented that term. The typical RAN that's, I guess more looked at as proprietary than anything else. And, years before this, we saw a huge change in the core network as it was virtualized and things like that from its prior proprietary roots. I would say that the next thing that I noticed was that 5G reality is inching towards the hype, and 5G, incredible amount of hype. I think we're in the fourth year of 5G, but the required elements of the layer cake, whether it's low, mid, or high band, are a reality. And I would say, while millimeter wave is incredibly important for its low latency, high performance, and high throughput, mid-band, I guess I would say, is probably going to be the meat of the action for what I would call traditional type of smartphone deliveries, because it kind of offers a blending of speed and latency, requiring less tower time to get done what it needs to be done. But it's very much becoming a reality. And I think even millimeter wave, some of the countries that had earlier, I wouldn't say rejected it, but just didn't do much with it, are realizing that for an internetwork and in very high dense areas, a millimeter wave is a requirement. We saw a lot of discussion about the edge, and whether that's the edge Mac, whether it's putting computing out there or just getting better at switching services. Edge is getting simpler to manage through things like AI, true AI, not fake AI, where it's auto magically doing intelligent switching out there. The next one, cloud is real in service providers. I mean, every one of the carrier equipment companies and every one of the carriers has a cloud play. Well, what does that mean? So instead of doing the point-to-point proprietary that they used to do, which then turned into virtualization, they're doing full-up containers, Kubernetes-based containers that, to me, defines a lot of what cloud actually is. Wi-Fi 7 is a reality here. It's funny. We just, huge enterprise deployments of Wi-Fi 6, which is incredible. Oh my gosh, even U.S. airports through Boingo have Wi-Fi 6, which is incredible because, it took them 10 years to go from 2.4 to 5 gigahertz. But Wi-Fi 7 adds even better features to allow more traffic, higher performance at lower costs. Two more, hang in there. Metaverse still is alive and kicking. It is funny when Meta came out and said, "Hey, we're doing this left turn." Everybody's like, "Wow, that's amazing!" And then their earnings hit. I think their stock went down 25%, and now the metaverse is kind of like, ooh, to some people, but it's very much alive and well. And I think within 5 years, headsets will be at least AR headsets at the point where we could get some consumer action going. Meta had a lot of behind-the-scene booths that was super interesting. I would say finally, manufacturers still can't get enough semis. Okay, they can't get them for the endpoints. They can't get enough for RAN. They can't get enough for the mid network, and they can't get enough for the core. So there we go. Whew, an entire week in 6 minutes.
Yeah, at the lot, Pat. And because the deal is I only get about 30 seconds, I'll say I did a Forbes piece. I put my 5 trends. We'll put it in the show notes. I think you see we're going from chips to networks, the big focus on private 5G as a service like Cisco. I thought the immerse next level and generation of laptops was super hot, so we're going from just mobile devices to mobile PCs. And then maybe the other thing is, it's another automotive show. It's continuing to grow that way. And then finally, sustainability and sustainable enterprise and sustainable connectivity was an underpinning of a lot of companies, more of that than I've ever seen at an MWC.
Wow. Thank you for the discipline. Look at you.
I'm gonna screw this up later. So hey, let's go to your second topic, because like I said, you get a 3-fer, then I get a 3-fer. Well, let's talk Apple.
Big Apple event. I won't hit the news. You probably hit that, but new iPhone SE, new low-end iPad, new M1 Ultra chip, and a new platform called the Mac Studio. So first of all, let's hit the iPhone SE. Some of the things that came to mind. It's interesting. There's room for an iPhone SE and an iPhone 13 mini, which we'll see what happens. The biggest difference between the two is you get one camera versus 2. The other thing is you don't get millimeter wave on the SE, and that's one of the things I wanted to bring up is should we look at the lack of millimeter wave as a conviction of the carriers for not bringing it out enough quickly? I think we should. We had 2.5 years. That there are solutions like Movandi out there to get G-Node B performance at 10% of the cost using one of their repeaters. So I see this as a fail for the carriers. Let's move on to the new chip. You have the M1 Ultra, which is 2 M1 Maxes glued together in a I would say a super high performance on silicon package using the latest of TSVs. So there's nothing new about putting 2 chips together in a package. Heck, Intel was doing this 20 years ago when I was at AMD. The challenge is, how do you get high performance and low wattage, right? And what is unique about what Apple did on the package is they did it in silicon using a TSMC packaging technique. What's less than impressive is they didn't stack it, right? So this is not even a 2.5D. I mean, maybe you can argue this is 2.5D. It's absolutely not 3D because there's nothing 3D about it, because you see these 2 suckers glued together, and performance is exactly what you would expect. It scales, and they have done some magic with programming to make 2 GPUs look like 1. It's already baked into the operating system to make 2 sockets look like 1 processor to the ISV, and that is important. What I'm seeing about early performance is does not outperform AMD's best, which is Threadripper, which doesn't surprise me. And it's funny, Apple came out and said highest performance, right? Well, in pure Apple fashion, it's not true. I give them credit for doing it in a much lower wattage and also adding graphics to it, which they're claiming are 3090 level graphics. But big picture here, evidence the packaging is as strategic as CoreLogic IP. Apple learned a lot from TSMC, Intel, and NVIDIA, and I'll be impressed if the performance per watt claims pass muster. They also brought out this new platform, essentially a Mac Studio. Take a Mac Mini, stack one on top of it, give it a lot of airflow, and you have what's called the Mac Studio, which houses the M1 Ultra. I would say that pragmatism is back at Apple. We've got freaking USB-A ports. What? Right? The company that had all Thunderbolt USB-C on its notebooks is getting super pragmatic here. And wait for this, an HDMI port. What? Unexpected, but this is smart. Now, unfortunately, the platform can't play any games, which I guess is fine. But if you're on Apple and you're looking for higher performance, this is probably a decent thing to look at. But if you want the highest performance, you still should be looking at AMD with an NVIDIA graphics card. Okay. Final thing. I should have brought this in on the iPhone. Where are the Apple modems, Daniel? That we heard so much about. 2.5 years ago, Apple bought a fully functional modem from Intel. It was late on millimeter wave, but on mid-band and low band, it was absolutely there. Where is this, Daniel? I have no idea. 2.5 years ago. Why didn't it show up in the SE? Why didn't it show up in the iPad, which doesn't have voice, which is a heck of a lot easier than doing voice and data? So with that, I am done, my friend.
All right. Well, I'll hit it quickly. This is a show that fills gaps in the lineup. It's not the big show for Apple. The spring is, hey, we've got a few things. Hitting that low end is going to be important. So, getting that SE out there, I think with the premium tier and even mid-tier Qualcomm Snapdragon, the Android devices are sexier at the bottom than the Apple devices. But I do think that Apple, knows its market, knows where it needs to hit price points, knows about volume. And, so that was the big part of that show. The iPad Air, the Mac stuff, these are gap fillers. As far as I'm concerned, the developer conference is when you'll get the next powerhouse. And then in the fall is when we see the stuff everybody really cares about. So it was kind of an Apple event. Snoozer in my mind, but, they did fill some gaps. So Google made an acquisition, Pat. Let's jump into that one.
They did. Google does not acquire a lot of companies. Surprise, for a couple of reasons. First of all, I think it knows that antitrust scrutiny would be high for them. Given their profile and given how much they own. Interestingly enough, they're not a market share leader. They're, I think, number 4 or 3 or 4 in terms of revenue, in terms of IaaS, PaaS, and SaaS. So gives them a little bit more of a green light. The size of this, them buying Mandiant's a $5.4 billion acquisition. And Mandiant is a multi-vendor, multi-cloud security company that has services, meaning people services, but also cloud services to be able to do cyber security. I happen to think that this is a really good move for Google because anything that they can bring to the table that's multi-vendor is important for them, because they do not have an on-prem capability right now. If you look at somebody like Microsoft, they have a ton of Windows and Windows Server and Azure Stack, and they also don't, so they don't have an on-prem play inside of the enterprise data center. They have the largest public cloud for consumer services, but and that's driving Google search and things like YouTube. But I think this is a good play for their Google Cloud customers, and anything that Google Cloud can be doing to add capability that are multi-vendor for IT is a good thing.
Yeah, Google's a company to keep our eye on. A lot to watch in the cloud. They're going head-to-head, toe-to-toe with Oracle, which I'm sure isn't what they want to hear, but that's where they're at right now in terms of market size. Need to get that business profitable. They've always been on the front end with things like hybrid and multi, and I expect they'll continue doing that. And these are acquisitions that continue to round out the portfolio and make the company more competitive. So good move for Google. I am trying really hard on each of these topics to just go fast so we can get through them all, Pat. So
Daniel, I think we just have to give each other credit that we both know what we're talking about on all these topics. But we're in a SpeedLoader round, and we have to have some discipline. But now you're up, buddy.
In doing no harm, do no favors. But it's our gravity that we want to make sure we know, and everybody knows what we know. But we're going to hit some earnings here. Something I always love to do. Salesforce, we had a lot of earnings report over the last week, but Salesforce had its big, full year number came out, 26.49 billion, 7.33 on the year. It was a record quarter for the company. And the company saw continued strong growth in subscriptions and support, professional services. One of the things that I've been focused a lot on with Salesforce, because like I said, there's no way I can do it in 3 or 4 minutes, everything, but has been their disaggregation of revenue. They've got a really great slide deck. You and I have been fans of companies that do good retail slides where they break down where their growth is coming from. Over the last several quarters, I've pointed out that their core businesses, Sales, Service Cloud, which are the 2 biggest revenue buckets for the company, have been growing pretty steadily in that 15 to 20% range. Nothing changed in the quarter there. Where everybody's eyes are, though, is the company's big bets. Your inorganic investments, Pat, you and I have had debates about these, good, bad, indifferent. MuleSoft, Slack, Tableau, the platform business that they're getting into, the marketing and commerce cloud. Of course, you're hearing about the rumors of their NFT cloud, which is going to be part of their commerce cloud. Where's the growth coming from? Well, that's where the growth has to come from. The platform business grew 36%. The data business grew 28%. And so I made a bold bet, Pat, that within about 2 to 3 years, the platform business will be the company's largest revenue stream. Benioff basically announced that goodbye to the 20s of billions and hello to the 30s of billions, as the company did paint a pretty positive outlook for next year. It does see itself in the 30 plus billion range now, surpassing and on target with some of the company's more ambitious goals. Now, frankly, the digital HQ is an area that I think Salesforce really needs to focus on. They've made this $27 plus billion acquisition of Slack. To me, the potential of it is tremendous. The actual execution so far leaves a little bit to be desired. I want to understand how Slack becomes the teams of the Salesforce ecosystem. And then, of course, with Salesforce not having a public cloud, but depending on a partnership with the likes of AWS, how aggressively can they grow a platform to make sure they stay competitive with what is an entire stack, top to bottom, end to end, that Microsoft is offering? That's where the competition is. That's where the competition lies. They've bought a lot of good pieces, putting all those pieces together, making sure the market understands them and using that to scale their platform business. And their new bet revenue is going to be critical as their sales and service clouds mature, and the growth will remain more likely in that 15 to 20% range.
That was good.
Yeah, nothing.
Yeah, no, I got something. Historically, so from a revenue standpoint, totally in line in what they did before. In the last 4 quarters, they've beaten between 0.9% and 1.5%. So them coming in at a 1.16 is good financial creativity, right? They hit that again, which was good. The interesting thing on EPS is they had a streak of 60 to 40% beats on the EPS, and they came in at 12%. So I don't know if it's decelerating or something hit that they didn't expect, but this is a company with a lot of financial discipline and able to hit the numbers just typically like clockwork. I like your comment about it being a platform and what it can do, and I'm interested to see if they can do that as well. I have my doubts, but we will see. I think the market does need a strong third out there with Microsoft and Google.
Well, there you have it. Let's run on to Honeywell. So Honeywell had its big investor day. We were off in Barcelona, so could not be there, but definitely appreciated the invitation. We've been tracking Honeywell through the lens of its technology and innovation bets. It recently spun off its quantum business, but that was really the inroads. But it does have a really significant set of technology investments that are related to the edge and OT. One of the leaders in building technologies, building and edge technologies, aerospace, renewable and sustainable technologies, fuels, and other things like that. So, I want to focus really on just a couple of the key points that I thought are worth noting for people that are watching Honeywell as a bit more of a tech and a growth company. It doesn't grow like a growth company, and we got to be very clear about that. But in terms of a market right now, when growth is somewhat on stilts, it is the kind of company that provides a lot of stability, consistent growth. It came and pointed out that, it drives a better return on invested capital than its peers at 15% versus 10.6. The company's been spending big to try to compete more, expanding its software in areas like Forge. It's also investing big to bring more money back to shareholders, $4 billion plan in buybacks this year to increase the value of the equity. One of the things that we've been watching really closely is Honeywell as a partner in helping technology and the tech industry deliver on its sustainability goals. This was a big part of its investor day. It's going all carbon neutral by 2035, which is ahead of what you've seen from the likes of Microsoft, Google, Amazon, who've pointed to the 2040, 2050 timeline. Of course, the Paris Accord, the same. Part of that is because this company actually is involved in things like the development of reusable energy for aerospace and transportation. Just to name one instance. Of course, building technologies that offer more carbon neutral footprints. So that's something that's definitely been going on. And like I said, the probably the last thing is that the company has been pragmatically investing in innovation. It's got a whole lot of investment in terms of it's got accelerator programs. It's got software and development. Like I said, the Forge platform is notable. The company is making significant inroads to be the partner to tech in sustainability. And of course, as IT and OT converge, this is a company that's got its hands on just about every major OT industry that manufacturing, aerospace, safety, you name it, transportation, they're in that space and they're helping to provide meaningful data that tech companies like SAP, like Microsoft, et cetera, can utilize. So a lot there, but the Investor Day really was all about how to return capital, how to accelerate the revenue for the company, and to make sure that market understood that innovation is part of their DNA, despite being often labeled value.
Whew. I get a minute here. So what I got super excited with, in addition to its ESG, which, by the way, I get excited about Honeywell ESG because they're one of the few companies that is the epicenter of it. A lot of companies talk about ESG, but Honeywell is in there supplying, the companies who can make the biggest differences. But I do want to talk about breakthrough initiatives. They call it BTIs, which essentially are technologies that they teed up to either spin off like Quantinuum or grow internal organic. One of those is Solstice. This is a low global warming refrigerant and blowing agents. And you ask, well, why are you excited about that? Well, guess what? You make refrigerants less pollutant to the environment, and you're making a tremendous difference. And oh, by the way, Honeywell thinks there's a $25 billion market there over its lifetime. HCE, essentially EPM, which is Honeywell not only makes the sensors and has all of the industrial equipment inside of these installations like factories. HCE allows you to do something with the data and gain intelligence from this. It's a SaaS play. It's a software play. They partnered with major companies out there. They put out a 25% growth rate out there. Next one, essentially drones, fly-by-wire, fly-by-radio, $54 billion pipeline out to 2030, which is like mind-blowing here. They make the motors, they make the drones, they make all of this. And finally, we've talked about this before, Quantinuum. They put out a new number on this. This is their quantum play. They put a $1 trillion projected quantum computing industry size. My only guess is that's like 10 years in totality, because the revenue isn't big right now. But no, it's an interesting. These BTIs are interesting, Daniel, from a potential growth play for the company.
Absolutely. Good catch. Drone business, very impressive. So much to cover. 3 minutes, not enough time. Let's go to Oracle. Oracle announced just yesterday, so we're hitting this one almost real time. Another really solid quarter for the company, Q3. It was their first mixed result in a while. The company had been on a bit of a tear or beat. beat, but as growth has been pummeled, Oracle, which is invested in some upstart cloud technologies, had to take some write downs on the book, which effectively is what made them miss on the bottom line number by all of a nickel. The market was somewhat adverse to reacted, but the guidance was really positive, so that sort of offset the down with the good. Is that Oracle is very positive on its longer term future. This is a company that has 70+% of its revenue is recurring, so very predictable and stable. So you get kind of the benefit of both growth and value, kind of going back to what we were talking about with Honeywell. The only difference here is it really does have a pretty aggressive growth engine in its cloud business, which is growing in the mid 20%. $2.8 billion this quarter, well surpassing now that $10 billion annual run rate across all of its cloud businesses. Which is, really impressive. The momentum for the Fusion and NetSuite, which are their SaaS ERP solutions. Fusion is the technology that allows Oracle to report earnings about 11 days, and generally speaking, after they close the books. That's some type of land speed record. That might actually be faster than I'm trying to talk through these 12 things in 1 hour right now, but very impressive. And that business has continued to grow. 33%. NetSuite, which is the small mid-market SaaS-based solution, at 27%. So just down from 35 and 29 respectively. But you're talking about businesses now, 8,500 Fusion customers, that's enterprise, 28,000 NetSuite customers, that's the mid-market to small enterprise, up and down. Some big wins of customers this quarter: Albertson, Vodafone, In-N-Out Burger, Hilton, GM Financial. And they're winning a diverse set of everything from their cloud at customer to infrastructure wins, tons of wins for their software in their ERP, their human capital management, supply chain solutions, enterprise process management. So they're winning supply chain. And again, I point that out because it's not a one-trick pony. There is a lot of good things going on at Oracle. Now, having said that, it's still going to be a battle with AWS, a battle with Azure, a battle with Google. But they have something that really does work to their advantage. You're talking about a company with hundreds of thousands of customers on their systems right now that are migrating workloads to cloud. And so I see Oracle increasingly getting pieces of business. And as this multi-cloud and hybrid cloud strategy continue to proliferate, it's hard not to see Oracle being a part of a cloud strategy, even if they don't get all of it, just because of the part of the business that they're so closely plugged into and so difficult, so sticky to get away from. So the 5% overall growth this quarter was solid, okay, but that's pretty steady with where the company's been. The guidance, again, they're guiding forward, same kind of revenue growth. They're not guiding their cloud growth, but I expect that to stay robust going forward. I really like their cloud business, their SaaS businesses. That's the part I'm really excited about. But again, the core 70% that's locked and loaded every quarter makes it a really healthy company in a good position. And it's not your grandmama's Oracle anymore.
Good stuff, man. A couple adders there. IaaS was 47% growth. Okay, so that's AWS and GCP scale on IaaS. That was kind of buried deep
and
in
Azure.
The release. Huh? No, I know. It was crazy. And the SaaS plays, whether it was the SaaS ERP plays, were well within line. They really like to point those out. Probably want to grind it in for SAP folks out there. One thing that was also there that I thought was quite interesting is Oracle spent time, talking about how good MySQL HeatWave was and how it just dominates on that and beats up on AWS and Azure. And then a sentence later is they're offering MySQL HeatWave at AWS. Right? So win-win. No, it's like, no, it was great. And it's like, oh yeah, we're offering this. And by the way, that is not a lose for them. One of the coolest things is, hey, run your software on specific hardware and in the public cloud. So it's win-win, and Oracle's getting their licensing.
Yeah, so much to cover there, Pat. We got to keep moving though. So your 3 is up. Let's talk GB.
Yeah. So who the heck is GB? This is Gregory Bryant, aka GB, and GB went to the number 2 role at Analog Devices. And first off, GB was one of the number 2 people at Intel. He'd been at Intel for 30 years. So it was like, what on earth would get a person with this lineage and pedigree to come to Analog Devices? And I'll be the first to admit, I research probably 15, 16 semiconductor companies. I do not research analog devices. And something though has to be something there to bring a guy like GB there. And they're a company with 25,000 employees, 75,000 SKUs, 125,000 customers, and they do exactly what you would expect based on their name: analog and mixed signal, power management, RF and microwave. Interestingly enough, they're probably a good customer of Tower Semiconductor, right, who has special analog type of manufacturing possibilities, and then edge processors and sensors. And as if you were paying attention to my Tower Semi, edge sensors are all about analog, hence analog devices. Boom. They do sensory, they measure, it does compute, connect, and power. What else? Annual revenue, $10 billion a year. And in very similar markets, it's interesting, as Lattice: industrial, robotics, automotive, ecosystems, connectivity and data center, digital healthcare, and aerospace. So it's interesting, Daniel. You and I cover a lot of different companies. These folks are doing it in a very unique way. I mean, think about this: 75,000 SKUs at 71% gross margin, which is eye-popping, which doesn't include Maxim, which I think brought the margin down. But anyways, this is a company that I will likely be paying attention to, if for no other reason. GB went there, and I want to know why GB went there.
So one word, one acronym, CEO. My guess is that there's a clear shot path, and if you're GB, there was probably not such an immediate path at Intel. And that would be a great way to dip your toe in a CEO gig of a $10 billion company. And like you said, I'm gathering and garnering that with him being there, we're going to be talking to him and about them a little bit more often in a space that's still building parts and pieces that are imperative. Now, we love to talk about leading edge, but some of these other technologies are so critical to so many things we use. He sees the opportunity. He went, let's go, Marvell.
Boom. Marvell Earnings, really good Q4 fiscal 22. They beat on the top by about 1%. They beat on the bottom by about 3.5%. Huge revenue gains, right? Like 68%. And it's funny, the only semiconductor companies that are growing that big are NVIDIA and AMD on the top line. Big. EPS up 71%. So not only do they grow big time on revenue, they're carrying it all the way to the bottom line. So which markets are on fire? Well, first market is cloud, right? Up 113%. It's incredible the amount of penetration that Marvell has inside of these hyperscalers, right? Particularly for networking, and that's not only for copper, but also fiber based on, and photoelectronic based on their big acquisitions they made. And this is an area that, quite frankly, a lot of companies struggle. And they're taking, there's no doubt in my mind they're taking share from Broadcom, possibly taking share away from Intel in this market. I haven't done that deep down analysis. Not only was cloud on fire, enterprise was up 64%. And as we saw with Cisco earnings, Dell Tech, and HPE, enterprise is on fire too. Now, what those three companies also said is that backlogs are a huge issue. But it doesn't look like it's as huge an issue for Marvell, given that they grew 64%. And little old 5G, 45% growth. Isn't that funny? When 45% growth is kind of a tack on. I'll also point out that in 5 years that Matt and the new team have been in there, they used to be 5 years ago, they were about 85% consumer and 15% infra. Now that is completely changed. They're 86% infrastructure, 14% consumer. And in my long history and me being old, Daniel, I've never seen a bigger transition of any company that I've seen from Marvell and do it successfully. Listen, I've seen a lot of companies do this and pancake on themselves because it's just way too much change. So I guess this is just another way of saying, hats off to the Matt Murphy team. So net the company is winning and growing markets, and that's a good place to be.
Yeah, great job by Marvell. Very impressive. The data center business was off the charts, 113%. Enterprise networking also red hot. But yeah, across the board, the pivot from consumer to data infrastructure enterprise has been palpable, impressive. The company is well ran. They're in the right markets. They've changed the way they report and segmentation to better help. I said last quarter in my Market Watch op-ed, they're no longer an also ran in semis. They are a player. They're a player to watch. Their growth and their entry into the right markets, their leadership, their partnerships, they're doing the right things. Hard not to like the company. Just making new partnerships with Dell just this past week in Open RAN. I mean, they're just getting into all the right spots and all the right spaces. And if you spend any time with Matt, with Chris Koopmans, the president of the company, it's hard to not like them. They move fast like a startup, but they're a really big firm, and that's something to be impressed by. Also, their acquisition strategy has been very sound, making good buys, companies like Innovium, good buys in the right spaces at the right time. And by the way, this is the company that really minted the DPU, despite the fact that they don't necessarily get credit for it. They have been extraordinarily out in front, innovating, doing important work. And I think the recognition is coming through the revenue growth, the sales, and then, of course, the appreciation of the stock price. So, Pat, got to keep moving. HPE.
You got it. Yeah, HPE Earnings. I think we both hit it. Oh, we hit it at the same time again. You go.
All right, I'll do it. You talk.
Click it. Okay. HPE just totally ripped after the earnings. And why? Well, they had an EPS beat of 14.63%. They missed on the top line by around 1%, but the stock ripped. It was up 6%, up 6% the day after. And, EPS beat and an EPS raise. So people are super excited. Their everything as a service GreenLake was up 23%. Orders were up 136%. And, the reasons for the big change between that is all about supply chain. For one of the first times, HPE came out and talked about order growth, right? We saw Cisco come out with order growth that was very respectable, and HPE came out with a respectable number 2 of 20%. So essentially, they have a 20% backlog, third consecutive quarter of having this. A couple other highlights: Intelligent Edge up 11%, orders are up 35%. After a few quarters of some stagnation in overall compute, aka servers or servers as a service, up 20%. Storage, and by the way, those compute orders were impressive to me because their next biggest competitor has been a little bit stagnant on the server side. Storage orders were up 15% after a little bit of stagnation as well. And it seems overall, Daniel, like the enterprise market as a whole is moving here. We've seen this with Dell Tech. We've seen this with Lenovo. We've seen this with chip makers who supply the enterprise market. We always knew cloud was growing from what the cloud chip makers and the cloud providers were offering, but the enterprise is here, and it's good to see HPE continuing what I consider their leadership role in X as a service with GreenLake.
Absolutely. And you and I will be in Houston next week with Antonio, and we'll have a chance to dig a little bit deeper and maybe bring some comments back here to the 6.5 audience. Look, the order book and the as a service business are where eyes need to be right now. The top line growth will likely remain negligible in a plus minus capacity. But the company's pivot, this is actually, we're watching right out in front of the public's eyes, what it looks like for revenue when you move from a CapEx to an OpEx model. The fact that they're hitting targets and growing triple digits in the OpEx or the consumption-based business is where the company needs to be. The order book growth is critical, and the continued diversification of the services. If you want to be an on-prem cloud, you're going to have to be able to compete with these cloud services that are being delivered at scale by the hyperscalers, which also are addressing on-prem cloud nowadays. So that's what I see. It's a company that's aligning to be both a partner to the hyperscalers and to the enterprises. That growth number, the growth of GreenLake, is everything as I see it. Watch that number. If that number is good, the future is likely going to be bright for HPE. All right, Patrick, swinging it back my way.
Got it.
We got 3 to go.
We did it again. There we go.
You click.
I got it. It's
All
up
right,
there.
We got 3 to go. Only one more earnings, I believe. So we're going to get back to some technology talk. So Qualcomm, BMW, and Arriver announced, I would say, an expansion of the partnership with BMW. To be clear, if you've listened to CEO Cristiano Amon for any period of time now, you've heard him talking about open, scalable, extensible digital platform, digital chassis to the automobile. The BOM of an automobile by 2030 is going to be something around 20% semiconductors. That number will likely continue to grow. And so for a company like Qualcomm, getting the wins of the major OEMs is probably the best indicator of what the future of their business look like. Talking about a company with 12 to 13 plus $1 billion in pipeline now. Now I say pipeline because the actual revenue is much smaller, but the process of conversion from winning a design to in-market revenue, especially in an economy where companies can't build cars as fast as they want to, is being extended out. But the real key here is that, the race for infotainment and telematics and those kinds of systems and vehicles that are chip driven is not the race that the public is super excited about. The race the public is excited about is how are we moving from L2 Plus, which is the Arriver platform, and it's generally where most of your newest high-end vehicles reside, to L3 and 4 fully autonomous driving systems. And this is going to be a partnership between automotive companies, OEMs, and technology companies. Qualcomm, and it's a little confusing, but it's impending Veoneer acquisition, which would give them the assets of Arriver, which would make Arriver part of Qualcomm, but it's not currently at the moment. But in the long run, they're going to bring this technology in-house. They're going to develop this technology. And the goal, to be very clear, is not just about L2 Plus, but it's really about building L3, L4, and beyond, and being the partner. And then, of course, having that open, extensible, think Kubernetes for your digital chassis. You got building blocks. And so that's where it's at. This partnership, like I said, just further validates. We've had partnerships announced by Qualcomm with Renault, with GM, with BMW, and plenty of other OEMs that are using Qualcomm in different capacities. And that open building block approach is going to be good because even if they don't win the whole design, they're going to win pieces of the design because of that level of flexibility. But this win, BMW Group, a company with great pedigree, a prestigious brand, but also a highly scaled brand in market, and a company that's very cautious and thoughtful about the partnerships they make, a very good indication for Qualcomm's long-term automotive prospects.
Yeah, real quick. To me, this is a testament to open software platform for cars, or specifically for ADAS and autonomous vehicles. And nothing in automotive is easy. But all I'll say is an open software platform for ADAS and autonomous vehicles is tougher than, let's say, something like infotainment. So I remember that the BMW deal used to be Mobileye and Intel, and it looks like it's shifting over to Qualcomm, which is also a bit provocative. But I still can't get over how quickly Qualcomm went to ADAS unknown to ADAS winning over auto groups like GM and BMW. But it's the openness that of the software platform that to me is so unique here.
Yeah, absolutely. And I think we're going to hear about this from Cristiano and the team and Nicole Dugal, who runs that business, a lot more. The wins have been coming in fast and furious. All right, we've got 2 more, and we've only got a few minutes. Pat, we are going to do this. We are going to do this. If I quit actually talking about the fact that we're going to do this, Mitel, Unified Communications, very, very established company in the on-prem, space is expanding its business, is growing, and probably the biggest thing from its analyst day, where we had the chance to hear from the company's CEO, top executives, was that this company is identifying the fact that the shift from on-prem to cloud is big, and going to subscription to be able to compete more fiercely with the likes of 8x8, RingCentral is going to be a big part of its DNA going forward. So basically across all the company's flagship platforms, it's going to go subscription based. Think of this as the everything as a service announcement that we got from Antonio Neri a few years ago from HPE. This is Mitel's version. This is what happened at this year's Analyst Day. Of course, there was lots of specifics, go-to-markets, verticals, strategies, but in the end, trying to take an event like this and summarize it in just a few minutes, it needed to make this pivot. It's not to say there isn't a ton of value. It's a lot like, I liken it a lot to contact center, the value of the legacy Genesys and Cisco contact center solutions, but moving to the cloud contact center in the same thing here in UC. People want their communication systems to be up in the cloud, highly scalable, easy to set up, add, delete, subtract, change features, do it all in the cloud and completely on a consumption basis. Mitel is moving in that direction. I've been saying they're going to for some time. They've been kind of flirting with it. Well, that was the coming out moment. We now know this is what's going to happen. And I do believe it will be a growth vehicle for the company, which will A, be looking to pivot legacy customers, and B, start to win and compete with deals that they couldn't offer an alternative to, which should be good for the company's long-term prospect.
Yeah, so 13 years ago, the public cloud was created at AWS S3. And this would be very similar to if, 8 years ago, HPE, Dell, and Cisco did a deal with AWS that said every time I send you a customer to your public cloud, I make money, and I can make money on my private cloud, and I'm not 10 years behind you in terms of this. So this is getting ahead of the curve. So I like that as a strategy. I don't think they had a choice. I don't think the board at Mitel was willing to make the huge investments it would take to have to compete with the cloud only plays. I like the way they laid out the customer transition. If you wanted to do RingCentral as UCaaS between customers, and we'll have to see. I'm interested to see how Mitel builds out their private clouds services for the future. I'm really glad they're making money though at every customer they send to RingCentral.
And there you have it. So topic 12, God, the double down edition. The brain power.
Keep it in there, dude.
We're gonna finish strong. We're gonna finish with one more kind of hyphen earnings, because really Splunk, which is a company that I've been following very closely for a long time, had a great relationship with former CEO Doug Merritt, as when he left, was very curious about how the company was planning to go forward. And then, of course, the results. Cisco allegedly was going to buy the company. Would have been a great deal if Cisco could have gotten it done, but it seems there was a few $1 billion separating them. Had their Q4 results, announced $3 billion in ARR, really solid results. But the big news, despite the 65% cloud ARR growth, 32% overall ARR growth, the 69% cloud growth, the 21% overall revenue growth, good, four goods, right, was that the company did finally name a new CEO. Now, having said that, this is a bit of an interesting impasse. The company had really said, we want to bring in a big name CEO to come in and invigorate the next wave of growth. Merritt was a longtime player, very beloved by the organization, but maybe seen as not the right person to take the company from here to there, which is often an important recognition that CEOs are able to see within themselves. The company ended up bringing in Gary Steele. Gary was the CEO of a SaaS-based security software called Proofpoint. That was a company he took public and then took private. And Gary is a name that I think the market is wondering, was he the definition of what interim CEO and chairman Graham Smith had meant when they said big time? So that's going to probably be the big question mark. When they went back private, Proofpoint, it was a $12 billion deal. This was before Citrix and a few other really large ones deals like that happen in more recent times. So it was a big number. And then, of course, when you have a CEO that went public and then went back private, and you have a company that's been allegedly on the block for sale, you can't help but ask the question, did they bring him in to be a deal maker in terms of some sort of go private deal? So there's a lot of question marks that come around this. There also were some departures. The company's president, Teresa Carlson, who is a big hire that came in from AWS, she's out, she's left. So you're already starting to see that executive turnover, that merry-go-round, or that happens after a new CEO comes in. Now, he's not starting till April, so there is still a little bit of a window of time. Okay. But during this window of time, the company is really still functioning on the growth of Doug Merritt and Tim Tully's strategy, the prior CTO, CEO, the migration to cloud, the pivot to as a service, and the numbers have been pretty good. The question is Gary the guy to take us to the next level? Not having a ton of experience with him, looking at the resume, he definitely seems like he could be the guy, but not necessarily the profile that I was expecting when the company initially came out. And I think the market's reaction to the earnings somewhat was in agreement with me, but the numbers really good. And so you got to give credit where credit is due. That pivot has been really solid. And of course, data observability at scale, huge thing. Positive moment for Splunk, but leaves some question marks. And we're going to have to come back to this in 1 or 2 quarters when we see how Gary steps into the role.
Yeah, I'm glad you explained that Gary doesn't start till April, because I was looking at him on Twitter and LinkedIn. He hadn't switched it. He hadn't switched over yet. In fact,
he should do that.
Gary hasn't tweeted since August 22nd, 2018. So not very social media active, which is never a requirement for CEOs. I will say, as I look at Gary's resume here on LinkedIn, he has a lot of CEO experience, right? He's been a CEO since 1998. And I think that means a lot. So he's definitely experienced. I am with you on the, we're going to bring in a well-known name. I think Gary is really well known inside of the security market. I would say, with his experience at Proofpoint, but less so with regard to this. But wish them best of luck, and hopefully I can get to meet him when he starts.
Absolutely, Pat. Well, there we have it. 12 topics. We hit MWC, Apple, Google, Salesforce, Honeywell, Oracle, Analog Devices, Marvell, HPE, Qualcomm, Mitel, and Splunk. We did it all in 57 minutes and 14 seconds to the letter. And yes, maybe we didn't go as deep as we normally did, but we hope you got a lot of value out of the analysis. I would say we didn't miss much. We talked a little faster, so hopefully you had your speed readers on. Your translation device is in full effect with that real-time translation, because we know we got a worldwide audience, and we appreciate every single one of you. We do have to say goodbye now for this week's edition of the 6-5. Hit that subscribe button, send your complaints to Mr. Moorhead, and all of your raving reviews and positive notes to me. I could use it. It's been a long week. Time to say goodbye. We'll see you later.
Everybody. It was fun.